I feel a lot of times like the canary in the coal mine. When it comes to deals happening in Canada, we do see the majority of what goes on.
What's driving deals? What's getting them done?
There are some gaps. Certain things aren't working. It does feel like there's momentum building. When I look at the land files we have.
Has the market corrected and are we on the way up? I really wanted to have you on because we talk a lot about the market trends and things like that. And for me, I think really the best barometer, the best metric of understanding what's happening in the market is understanding of what's happening on transactions. I'd like your view and sort of an overview for our audience on what you see happening by way of transactions in the market today. What's driving deals? What's getting them done? What type of deals are getting done?
Well, I would say that I feel a lot of times like the canary in the coal mine. When it comes to deals happening in Canada, we do see the majority of what goes on. Right now, a lot of groups would think that it's not the most active period of time, but I'll tell you, this will be a record year for Canadian trading volumes. And it's going to happen because of the M&A that's going on. So when you have the FCRs, Amicas, and on, there's going to be probably 4 M&A deals, at least 3 this year. So it's going to drive volume. There are some gaps. Certain things aren't working, like land is very tough, even though we've just done a couple of big ones. If I look across Canada, I'm pretty happy with what we're doing in industrial. The biggest part of our business right now is trading office again, and most people wouldn't feel that. And retail would shock people as to what's going on, the size of some of the deals, just the different caliber of players. And when you get to multifamily, even though the rent curve's a little bit off, we think we're at the bottom in the Ontario market. Still a little ways to go in BC, but that all sets up a very positive background for what's going on in the markets.
I think at the height of the market, let's call it before the interest rate hikes in Q4 of 2022, we were seeing land transact in the more important parts of our market between 100, 150 a buildable on average, maybe even higher in some key areas. Flash forward to today and they're less than half of that. Has the market corrected and are we on the way up? I'd like to hear your thoughts on some of that.
Yeah, I would love to say we're through the worst of it, but we're not. If you look at land used to be 15 to 20% of our business. Like all of a sudden now it's less than 5. Like there's just so little land going through. So we did a really big one that went firm on Friday. That's M City out in Mississauga. So significant kind of trade. We just did 212 King West downtown. Outside of that, it's been a really slow period, but it does feel like there's momentum building. When I look at the land files we have, the volume is endless. Our whole Vancouver business is power sale land. So I'd like to say we're through the worst of it, but we're not. So there's still a lot of challenges. A lot of the sites that want to come to market are just not economical. The amount of density that's available in all parts of the city, all asset classes, it's just too much. Center Court recently bought a site, Yonge and Shepherd. They bought it at about 50 a buildable. So they think it's about a third of the peak. I think when I go through and look at it, we don't have the ability to move units and volume, whether you're leasing or buying. So we got a ways to go. Good news, rents are firming in the multifamily side. So that's where you start to find the bottom forming. In Vancouver, we're still seeing it do this. Calgary, it's still soft. Montreal, still soft. They're still trying to find their bottoms.
Do you have a 2-year, 5-year, 8-year look ahead on the cycle?
We didn't create the problem. And when I say we, the real estate community.
Right.
So this is something, normally there's an overbuild or there's a over contribution of debt from the bankers. This one, the rules were changed. Everybody was building to an immigration program that just suddenly snapped.
Yeah.
It broke. That whole relationship has left a lot of developers in the lurch. It's not been great. As immigration starts to rebound, we're expecting a little bit more. Student housing will look better. Condo development will look better. Apartment development will be better. Under the weight of immigration, our hospitals are upside down, schools, airports. We had too much. It has to settle. Our existing prime minister, he's a really smart guy. I think he's working through things. So let's hope we land that in a good spot.
Land price recovery and transaction flow I think what I'm hearing you say is less to do with rates and more geopolitical than it does.
It's everything. It all ties together in one basket. The way we gave away money post COVID was so bad.
Yeah.
Like it was just, it's, the legacy of debt, when we need so much money as a country for so many different initiatives, what was given away has left such a big problem. So it's hard to think how quickly we can get through all of the different challenges. It's not a 2027 kind of thing. We're hoping for maybe 2028. You start to feel that more normal kind of residential market. And if it's not 2020, like everything comes back at some point. So, making a bet today, I think whether you're looking at, core office, industrial land, you're able to buy things at a cheaper basis than, I don't want to say ever before, but for a long time, like it's a great entry point. Nobody's building today. So finished product looks great. I think land values are coming down to the point where the smart groups that are very confident in their teams, that really know how to develop, sell, or lease and manage, it's going to be a good day for them.
Does it take one major transaction to turn things around, or is it going to be a series of smaller ones?
It's going to be a series, because again, what we just did on Friday at M-City, that's as big as it gets. That's a really smart group stepping up with capital and ability to get things done. So you'll see more of that.
I think my last question is what we're seeing more a lack of landowners not wanting to put their properties out on the market because they know that they're not going to get what they once could? Or is it because developers are already oversubscribed? They don't want to land bank more than they already have, so they're just not buying?
It's both.
It's both.
All the land, every landowner, like things were so good for so long. If you had one site, you might as well have 20. And so now you've got these exponential problems, because you got every site is a challenge. So any which way you look at it, it's a bit of a problem. If you're an owner, if you bought anything late cycle, you're underwater, you're working with your lenders, you're doing all that kind of stuff. There's no real way out other than wait.
Yeah.
So you're kind of forced to be patient, which is not what a typical developer wants to do.
Right. Peter, I know you don't do this for everybody. I thank you for doing it for me. I really appreciate it. Good to see you too. And hopefully we see each other and are able to shake hands on some more deals coming down the pipe.
Can't wait.
All right. Thank you, Peter.